Bitcoin ETFs bleed $126.7 million in first weekly outflows since June. Is Rectember imminent? Bitcoin ETFs. Bitcoin Spot ETF. After a 6-week inflow grind, BlackRock's IBIT, Fidelity's FBTC, and ARK's ARKB face a $126.7 million weekly reversal that trims spot Bitcoin ETF AUM to $139.95 billion. Journalist Hassan Shittu. About author Hassan, a cryptonews.com journalist with 6+ years of experience in Web3 journalism, brings deep knowledge across crypto, Web3 gaming, NFTs, and play-to-earn sectors. His work has appeared in Author Profile, Share, Copied, last updated 5 hours ago. U.S. spot Bitcoin exchange-traded funds, ETFs, recorded their first weekly outflows since June, raising questions over whether September, historically one of Bitcoin's weakest months, could bring further pain for investors. According to data from SoSoValue, on August 29th, spot Bitcoin ETFs saw net redemptions of $126.64 million, snapping a 6-week streak of consistent inflows. The withdrawals reduced total assets under management to $139.95 billion, representing 6.52% of Bitcoin's market capitalization. Despite the setback, cumulative inflows since launch remain strong at $54.24 billion, showing the scale of institutional participation. Bitcoin ETFs post $751 million August outflows as Ethereum products outperform. Fidelity's Wise Origin Bitcoin Fund, FBTC, posted the steepest daily outflow with $66.2 million, followed by ARK Invest and 21 Shares ARKB with $72.07 million. Grayscale's GBTC, which continues to bleed capital as investors rotate into lower-cost funds, lost a further $15.3 million. BlackRock's iShares Bitcoin Trust, IBIT, bucked the trend, adding $24.63 million in new inflows and extending its dominance as the largest Bitcoin ETF with $80.98 billion in assets. August marked a clear reversal from earlier bullish momentum. The month closed with $751.1 million in total outflows, compared with inflows of $6 billion in July and $4.6 billion in June. The only other red month this year was April, when ETFs lost $767.9 million. Analysts suggest the latest drawdowns reflect profit-taking and a broader market correction following the strong summer rally. Ethereum ETFs also faced headwinds on August 29th, recording $164.64 million in daily outflows, halting a 5-day inflow streak that had added more than $1.5 billion to the asset class. Fidelity's FETH and Grayscale's ETHW bore the brunt, shedding $51 million and $61 million, respectively, while Grayscale's flagship ETHE lost $28.6 million. Despite the downturn, cumulative inflows into Ether ETFs remain positive at $13.5 billion, with BlackRock's ETHA accounting for $13.1 billion of that total. Analysts warn of deeper correction if BTC fails $112,000 to $115,000 support. The divergence between Bitcoin and Ethereum ETF flows has been notable in recent months. While Bitcoin ETFs have attracted $54.6 billion in net inflows since their January 2024 launch, Ethereum ETFs, which began trading 6 months later, have already secured $13.7 billion. More strikingly, August saw Ethereum products outperform with nearly $4 billion in inflows, compared with Bitcoin ETF's $622.5 million in net outflows. This shift coincided with Ether's relative price strength. Since mid-July, ETH has erased its year-to-date underperformance against Bitcoin, climbing to a 13.8% gain versus the top cryptocurrency. Analysts attribute the move to the arrival of Ether ETFs, which have concentrated investor demand into highly liquid, low-fee products. Still, both assets face mounting uncertainty as September begins. Bitcoin closed August at $109,000, down 6% for the month. Historical data shows the cryptocurrency has averaged a 3.77% decline in September since 2013, earning the month the nickname Rectember among traders. Market watchers are eyeing key levels between $112,000 and $115,000 as potential support. A failure to hold could see prices retreat toward $103,000, which would threaten $3.28 billion in leveraged long positions. Despite the recent turbulence, liquidity across crypto ETFs remains robust. Spot Bitcoin ETFs alone recorded $4.31 billion in daily trading volume on August 29, with IBIT accounting for more than half. Analysts warn of Bitcoin death cross signal last seen before 2021 crash. Notably, according to today's report from CoinShares, digital asset investment products rebounded strongly from the prior week's withdrawals, recording $2.48 billion in inflows. That pushed August's total inflows to $4.37 billion and lifted year-to-date commitments to $35.5 billion. Momentum was broadly positive through most of the week, but flows flipped negative on Friday after U.S. core PCE inflation data dampened expectations of a September Federal Reserve rate cut, weighing on sentiment and contributing to a 10% slide in total digital asset AUM to $219 billion. The United States remained the dominant driver, with $2.29 billion in inflows, though Switzerland, Germany, and Canada also contributed, bringing in $109.4 million, $69.9 million, and $41.1 million, respectively. Analysts suggest Friday's reversal was more likely profit-taking than the start of a wider downturn, given the breadth of regional support. Ethereum continued to outshine Bitcoin, pulling in $1.4 billion compared with Bitcoin's $748 million. For the month, Ethereum secured $3.95 billion of inflows, while Bitcoin posted $301 million in outflows. Among altcoins, Solana and XRP drew $177 million and $134 million, respectively, buoyed by optimism over potential U.S. ETF approvals. That optimism is underpinned by a swelling backlog of ETF applications. According to Bloomberg intelligence analyst James Seifert, 92 crypto ETFs are currently pending with the U.S. Securities and Exchange Commission, up from 72 in April. The bulk of new filings focus on Solana, XRP, and Litecoin, with Solana leading at 8 applications and XRP close behind at 7. Final deadlines for many of these products cluster in October, intensifying speculation that approval could trigger fresh capital inflows and potentially kickstart an alt season. Still, Bitcoin's technical signals suggest caution. Analysts point to a bearish death cross on the market value to realized value (MVRV) momentum indicator, last seen in late 2021 before the cryptocurrencies slide to $15,500. Despite climbing to an all-time high of $124,500 earlier this year, the weakening MVRV trend signals waning capital inflows. If history rhymes, some warn Bitcoin could face a deeper correction, with targets as low as $105,000, or even $60,000 if bearish momentum accelerates. Follow us on Google News, Trending News, Recommended Popular Crypto Topics Price Predictions. ChatGPT predicts the price of XRP, Cardano, and Dogecoin by the end of 2025. BlackRock offloads millions in BTC after weekly buys, market manipulation, or routine rebalance. China's DeepSeek AI predicts the price of XRP, Avalanche, and Dogecoin by the end of 2025. Trump to launch $40 billion WLFI token. September 1. XRP holders gain new opportunities every day through blockchain cloud mining. Price analysis. Ethereum price prediction. Joseph Lubin confident in a 100x rally and a BTC flippening. 1 day ago, by Arslan Butt. Press releases. XRP price prediction. Expectations of a Fed rate cut could push Ripple's price up by $10. Insiders recommend fine mining's XRP contracts. Bitcoin news. Why is crypto down today? August 29, 2025. 3 days ago, by Seed Fadil Pazik. Best crypto to buy now in September 2025. Top crypto to invest in. 5 days ago, by Alan Draper. New cryptocurrencies to invest in September 2025. Top new crypto coins. 3 days ago, by Inesis Tavares. 12 best crypto presales to invest in 2025. Presale crypto list. 8 hours ago, by Alan Draper. 15 new and upcoming Coinbase listings in September 2025. 7 hours ago, by Elijah Rankovich. 15 new and upcoming Binance listings in 2025. 6 hours ago, by Elijah Rankovich. What is the next crypto to explode in 2025? 4 days ago, by Elijah Rankovich. Bitcoin, BTC, price prediction 2025 to 2030. 11 hours ago, by Leon Waters. XRP, price prediction 2025, 2026 to 2030. 3 days ago, by Eric Huffman. Ethereum price prediction 2025 to 2030. Will ETH bounce back? April 2nd, 2025, by Ben Beto.